Analysis for US dollar Japanese yen. The potential of the yen was discussed by Deutsche Bank experts. The trading pair US dollar Japanese yen reflects a moderate rise, being at 136.50, developing growth. The American dollar continues to recover the positions lost the day before, which was due to the release of the macroeconomic bloc from the United States, according to which the initial applications for unemployment benefits renewed the show of 211,000, beating analysts' expectations of 195,000, and the previous figure of 190,000, and the total value of population, which were approved payments, strengthened to $1.718 million to the previous $1.649 million. Meanwhile, experts from Deutsche Bank AG allow the Japanese yen to strengthen by 60% provided that the national regulator will change the trend in the issue of monetary parameters and the U.S. Federal Reserve will follow suit and move to reduce the interest rate. According to analysts, the yen is fair value equilibrium lower by 30% under current conditions, and Japan's 10-year Treasury securities should yield between 1.5% and 1.6%. At the same time, according to comments from representatives of the Japanese banking institution Mizuho Securities, after the change of the head in the Bank of Japan, the regulator is likely to continue to maintain the current course of monetary policy until the end of Q2, because the dynamics of inflation is not weakening. Thus, in January the annualized consumer price index accelerated at the highest rate since late 1981, having gained 4.3%. Analysis for Australian dollar-US dollar. The pair is trading near the local high. The Australian dollar-US dollar trading instrument displays moderate strengthening, resuming positions at 0.66, continuing gains, intending to move away from the local low of November 10, updated by Tuesday's sharp rise in the US dollar. Bulls successfully developed the dynamics due to the comments of the head of Federal Reserve in the U.S. Congress, where he supported the idea of continuing the interest rates adjustment policy, and stated that the indicator will hold high positions for a long period of time. Taking into account the regulator's position, some investors revised their expectations of the March meeting results and now officials are expected to raise the value by 0.5% rather than by 0.25% as was expected earlier. It also assumes that the target will be updated to 5.6% in the second half of 2023. Earlier in the publication came the January block of statistics of the Australian construction market, which turned out to be weak. For example, the overall rate of approved applications for construction work fell 27.6% and for private sector construction fell 13.8%, confirming a strong negative trend in the sector amid a systemic strengthening of the interest rate by the Reserve Bank of Australia. Thank you for watching this analytics. Our company specializes in providing signals for trading in all financial markets such as Forex, stock market and crypto. You can find the whole article at the link in the description. You can also like this video and subscribe to the channel.